Hello friends, welcome to BISP Solutions. So let's continue our session on Oracle Fusion application in accounts receivable. So before starting the webinar, let's know today's agenda. So today we are going to know about reciprocal customer creation and configuration. So in this webinar we are going to cover the introduction part of reciprocal customer. Then we will be covering the key benefits, and then we will understand the core concept, and then intercompany accounting also we'll see. We'll see intercompany accounting, then we'll see some scenario where we'll see the challenges and best practices. So let's start our webinar. So let me introduce what is a reciprocal customer. A reciprocal customer is an entity that acts as both a customer and a supplier to your organization. Imagine two business, company A and company E. Let's say we have a two business, company A and company B. So company A buys product from company B and simultaneously sells services to company B. Company A buys product from company B and company B sells services to company A. Now you understand the concept carefully. In such a case, company A is both a customer and a supplier to company B. Correct? Oracle Fusion facilitates tracking and managing these dual relationships efficiently, ensuring that payables and receivables are aligned and properly reconciled. So we have seen the scenario where company A sells product to company B and company B sells services to company A. So in this case, company A is both a customer and a supplier. This is the introduction of reciprocal customer. So Oracle Fusion gives us the facility to manage these reciprocal customer efficiently. Now let's discuss the key benefits of reciprocal customer management. So managing reciprocal customers offer several advantages. So let's discuss the advantages. Advantages: it's simplified payment and reconciliation. Advantage number one is it's simplified payment and reconciliation. Instead of issuing multiple payments or collections, the two companies can offset what they owe each other. Example, let's understand from the example. Company A sells goods worth rupees $10,000. Okay, it sells goods worth $10,000. sells good worth to company B. Sell goods 10,000 to company B. And company B supplies raw materials. Company B supplies raw materials company B supplies raw materials worth 7 worth $7,000 to company A. So the outstanding balance becomes $3,000. Instead of requiring two separate transactions for $10,000 and $7,000, it improved cash flow management. By settling reciprocal transaction, businesses avoid long delays waiting for separate payments and can manage cash flow more efficiently. Also, there is a visibility across transaction. So Oracle Fusion provides a complete picture of the financial interactions between the two entities. So we have seen the key benefits. Now I'll see the core concept. Let's see the core concept. Let's see the core concept. Core concepts in first we'll see in AR, then we'll see in AP. So in AR, as a customer, the reciprocal entity is billed for the goods or services provided by your organization. In AR, these invoices are tracked and payments are expected from the customer. Example, let's understand from the example. Company A provide consulting services worth $5,000 to company B. This amount is billed as an invoice in AR and company B is expected to make the payment. This is the scenario for accounts receivable. Now let us come to AP. On the other hand, as a supplier, the reciprocal entity invoices you for the goods or services they provide. Example, company A purchases office supplies worth $2,500 from company B. This amount is logged in AP and company A must pay company B. By linking the AR and AP modules for these reciprocal relationship, Oracle Fusion helps manage both sides of the transaction efficiently. This is the core concept of AR and AP, how to manage AR and AP both together. Now, there is an intercompany accounting in reciprocal relationship. In case where the reciprocal customer is part of different legal entities within the let's say within the organization, intercompany accounting becomes essential. This feature ensures proper tracking of transaction between business unit. Let's take example. Suppose company A has two business. Let's say we have company A and we have company B. So company A has two businesses. BUX and second BUY. Business unit X sell product to company B, so it sells product to company B. worth rupees worth $15,000, and business unit Y purchases raw material from worth $8,000 from company B. So Oracle Fusion automatically offsets these payables and receivables, reducing the outstanding balances to $7,000, while creating the necessary intercompany accounting entries to ensure accurate financial reporting. Intercompany accounting makes it easier for large organizations to manage complex reciprocal transactions across multiple legal entities and business units. So when we perform this action, we faces some challenges and best practices. What are the challenges, and let's discuss on what are the challenges and the best practices. So managing reciprocal customer relationships can present challenges, especially in handling the reconciliation process between payables and receivables. So what should be the best practices to remove the challenges? There should be best practice should be there should be a clear agreement, in clear agreement we ensure there is a clarity in contractual agreements between your organizations and the reciprocal entity. Define clear payment terms, credit limits, and offsetting rules. Let's understand agreement with example. If company A and company B have agreed to offset balances automatically every month, this must be included in their contract and set up in Oracle Fusion for seamless automation. Second best practice is frequent reconciliation. In this, regularly reconcile the receivable and payables amount to avoid discrepancies. This is particularly important when dealing with high transaction volumes. So this is the second best practice. In the third best practice, what we can do, we can use automation. By leveraging Oracle Fusion's automation tools for reciprocal customer can save time and reduce manual error. For example, Oracle Fusion automatically offsets company's A's $10,000 receivable against company B's $6,000 payable, saving time that would otherwise be spent managing multiple invoices. So this is what a reciprocal is. So when we talk about the instance, we have to go to project. There is some configuration that first we have to move to our project, and in project we have to search for the manage user. With project, manage users. See, I have not opened any project here. Okay, I am directly searching from universal search. So we have a target manage users because we will make the users on behalf of the business unit, and we have already one user. So this configuration and all I'll explain tomorrow. So today only we are covering the theoretical aspects of reciprocal customers because it's a deep concept. So for practical and configuration, tomorrow I'm going to explain. So for today, this much only. Let's meet on the next session. Thank you so much for joining this webinar. Take care.